cautious as the market has been so far ahead of the data. So let's have a quick look in the charts. Just I'm not gonna share the calendar. I'm gonna try to keep myself up to date with the news. But for the time being, this is a dollar yen, by the way. Let's see together the dollar index. We can see that dollar has suffered some sharp decline ahead of the data. Let me you know what the markets are afraid of is a really strong number, a really strong inflation number that could signal an even more tighter Fed and another 75 points, and that could explain why the markets have pushed the dollar lower ahead of the data. Is it something like they're trying to buy the dip condition or something? Don't really know, but we have seen the dollar in a big drift, okay, since this morning ahead of the data. Is like they are anticipating a really strong number that could signal further tightening and boost the dollar higher. Will that happen? Will not? Let's wait and see. For the time being, the anticipation is for a 6.8 percent year-over-year basis for July, excluding food and energy. The headline is expected at 8.7, while the monthly is expected to slow down at 0.2%. Will that happen? Will not? Less than a minute left, so let's wait and see. Until we have the data out, let me just check my chart. Present, hello, euro dollar. Okay, so let's have the euro dollar for a change and wait until we waiting for the data. Let me know if you're okay with the setup, because you have seen that we have changed it to a white. Okay, let me know if you're struggling with it, and also let me know what other assets you want me to cover. So 100 people are here. So guys, for everyone that is here, put on the comments below the YouTube or below the Facebook live any questions that you have. So what's going on? So the dollar is getting some traction. Are the data out? Let me refresh. Come on. Ooh, oh my God, that's a big mist. Let me share. Oh, that's a big mist. And that is, can you see that? This is euro dollar up. That means dollar weakness. And the reason for that, okay, that is coming well. That is a surprise for the markets, because the markets were boosting we're pressuring dollar on the anticipation that the report will be strong, but instead what that presents, let me share it, guys. I really want to share the calendar right now. I don't know yet that you might not really care, but I want to zoom in over here. So 8.7%. So what that means, that the inflation is lower than what was anticipated and lower than last month. So why this is important? Because it's important because it means that what the Fed has done so far actually has brought some fruits, has results. So the lower reading implies that the continuous increase of the interest rate hikes has actually managed to control a bit, at least for July, to slow down a bit, to detect a bit the inflation. So will this be a signal that Fed will not be as aggressive as we were expecting in September? This will mean that the Fed could increase interest rates, but less points than the 75 that it was expected. So this is definitely what is adding pressure to the dollar right now. So the midst of the results pushing the dollar lower, not because the dollar is weak, but because the results mean that the Fed could increase less than 75 points in September, or in a best case scenario to pause the tightening. But that's too extreme. You know that so far a strong report could imply to 75 points increase for the third straight time in a row, but the lower inflation right now has changed this scenario. It's a big surprise. So dollar, I shifted to dollar, guys. This is dollar index because I want to check together to check with you the dollar first, and then we'll go to the dollar, to the euro pound, guys. Okay, just be a bit patient with me. So big dip, exiting this range that we have seen since Monday, okay, Tuesday, sorry. Big dip below the 106, obviously, breaking, and actually is retesting the 105, another round number. He has touched it. Have you seen? It touched it, but it hasn't broken it yet. So what will happen if it breaks it? If it breaks it, the very first immediate support level is that bottom that we had seen in the 1st of August. So just few pips lower, just 11 pips lower. That's the very next immediate support level. However, we need to figure out the very next support level. So I have to put on the daily chart because I need to find out the next support area. So let me just put my inverse head and shoulder, inverse Fibonacci over here. So that was supposed to be the very next support level, which is 11 pips lower. And the very next one is coming down to that looks a nice one. 103.94. Why is that? Because it's the 123 Fibonacci extension and the resistance that has now turned into support. But that's it. There is a long way until that level, and it needs to break below the August bottom in order to imply that it might get back down to 104 territory. Okay, that's a long way until then. So where we're standing right now, we're standing just a breath away from the 105. So that still is our key support area. So I will zoom in again. Okay, and I will put a rectangle over here. Why? Because this area that I have drawn over here is between the 105, which was the bottom of this candle, and the 104.90. So 10 pips lower is the bottom of August. So this is a key support area for dollar index. A break of that could open the doors to 104. Okay, but for those that are intraday traders and you really need you want intraday support and resistance levels, then the very next support level should be, I need to zoom out, unfortunately, sorry for that. Here we are, and check my latest down fractals. So what I have over here is 104.56 is the very next one, and if that breaks 104.30. So I have drawn for you at the very next support levels in case that this area, the 104.90, breaks significantly. Okay. To the flip side, however, if the asset fails to break the 105, if it breaks to drift further to the downside, if we see it rebounding or finding some support on to the upside, the nearest resistance areas remains the 105. What is this? Let me just draw it better. So it should be on that bottom over here. So 105.50 is the next is the resistance area for the asset. So let's shift to euro dollar because it's something that Anthony asked for a long time ago. When you have a chance, we'd like to know about the pair, of course. So on the pressure of dollar, we have seen euro dollar topping at what, 103.20 something. So Okay, I will. I'm zooming out. I have the euro dollar 4 hour charts over here. Why is that? Because it has broken 2 weeks 2 weeks range. And you see, for 2 weeks in a row, for 2 weeks, maybe more, if I'm not mistaken, since the 18th of July, euro dollar is consolidating between 103 and 1 territory. Parity and 103. So it's moving sideways. Today, it has broken this range and not only broke this 2 3 weeks range, but also rejected and broken the 200 period moving average. Okay, moving outside the Bollingers over here. So where is the next level to be a resistance level to be seen? So that's very interesting, very interesting, very interesting. There is a strong barrier, a strong handle at 103.60 territory. Let's make it round number. 103.70 territory. Well, why is that? This is a 61.8 Fibonacci level from the big drift that we have seen between June and July. And not only that, this is also a support level. It used to be a support level, okay? It used to be a support level between for 2 months, May and June. So very strong resistance area for euro dollar is this level over here. 103.70, 103.65 if you prefer. It's a confluence of 61.8 Fibonacci level from the latest down leg that we got. It used to be a support for 2 months, more than 2 months, and now it's converted into resistance. So a decisive break of that territory and a continuous move above it could bring the 106 and 105 territory back into play. That's medium term, guys. Okay, medium term. So key resistance area to be seen. Okay, if that breaks decisively tonight at the closure today or within the week, if for any reason euro dollar post a daily candle above that level and it keeps moving higher, that could open the doors to 105 and 106 level. Okay, now intraday. By the way, there is a strong support still at 102.85. So it used to be the top area of our range at the 50% retracement level, now converted into support level. And if the asset turns back down again, below the 102.84, then the next level to be seen will be the mid of this range and the round 102 level. So resistance, immediate support, and the very next support if our asset comes back down below the 102.85. Okay, so resistance, come on, support with the yellow, support with the yellow, support with a yellow. This is in case that our asset comes back down and get it into this range. Now, intraday, you might say, Andrea, I'm a scalper. I like 30 minutes chart. What shall I do? I cannot tell you obviously what you can do, but I can help you identify support and resistance levels. So the area that I posted, this key resistance area, the 103.65, 103.70 area, remains the intraday resistance, a key intraday resistance as well. Okay, so have this in mind. To the downside now, there is nowhere else to go. Actually, we need to wait for this candle to close. But yeah, 102.85 is still a support level. So let me go to the 30 minutes chart or something to see what else is over here. I would like also, you know what? I'm gonna put my 5 and 9 exponential moving average, the ones that I were using for intraday base for less than an hour chart. So let's put it in a yellow exponential one, okay? And let's do another one, a green one with a 9 exponential moving average. Okay, what we can see so far is that they both point upwards. You see, I don't know how visible that is. They both point upwards. So there's still some bullish bias over here after the surprise from the inflation figure earlier. So, such as saying, I want to learn. So start registering to our webinars or keep watching our lives. So euro pound, of course, euro pound. And guys, give me a second to see what else is going on around. We'll see inflation. We have the mist. Yeah, there's nothing else I think going on. Just to keep myself up to date with the news. No, okay, we can continue. Okay, so euro pound. Okay, okay. Here we are. I'm gonna start with the daily chart. We have seen some kind of it looks to be a descending channel, a down channel since the mid of, is it? Let me just, okay. Gonna detect the standard deviation over here. It looks quite big. Yeah, that looks much better. In a declining downtrend since the beginning of June. Yesterday we had a break of the 20-day moving average. However, so far today the asset fails to extend this rally that we have seen for 1, 2, 3, 4, 5 days in a row. Nonetheless, is presenting some pressure. So, is this a turning point? Question mark. It has been a turning point since the beginning of June, but we don't. We need confirmation. So keep an eye tonight at the closure on the closure of this daily candle, whether the asset will turn back down, and it could alert that this is a turning point with indication that it will get back down again, retesting the mid of this channel and the bottom area of the channel as well. So keep an let's okay. So key support level, it will be the 84.20 area, not 0.8420 is the yesterday's low and the nearest and the next support territory. So a closure today below that level could open the doors to another leg lower for euro pound. So overall, euro pound is in a decline, as we said, it's in a downtrend. MACD remains negative for a full month, maybe more than a full month. RSI holds below 50 again for more than for more than a month, and it's struggling to extend, as you can see, points downwards again. So there is still a lot of bearish bias in regards to euro pound. So now intraday. So keep an eye on this. This is the support area, and today's highs is our immediate resistance area. Let's zoom in and let's check together the intraday picture. So what we have over here, we have a quick pullback and actually a quick pullback, as you can see, returning the gains that we have seen so far. So, and breaking obviously the immediate support that the day support. So let me just, that's the latest up leg that we had. It's already halfway. You see, has already returned nearly 50% of the gains that we have seen this week. So the very next support level for euro pound will be the not 84.30 territory. Okay, so that's the area, the intraday support area for euro pound. And break of that could bring the attention back to last week's bottom and the 104 level. Okay, round number. And let me just, yeah, okay. Again, you can see that intraday, the momentum is slowing, the positive momentum is slowing down, is decreasing. We have a bearish cross of the stochastic over here, and the lines are pointing downwards. RSI, no, you cannot see that. I need to somehow rearrange it. So here is a bearish cross of the stochastic, suggesting that there is an increasing selling pressure for euro pound. And can you see over here that RSI also agrees with that? So there is a sharp slope to the downside, moving below the 50 territory, the neutral territory, pointing further to the downside, like there is further steam to the downside for euro pound. So that was in regards to euro pound. Gold, of course, one of your favorite guys. I know that. Euro, you said gold, right? Gold. Yeah. So what we have over here. So on the weakness of dollar, gold seen some like ground extending gains, topped to, so broken 108 territory, 1800s territory, topped at 1807. Sorry. So I'm gonna start with the daily picture again, just to figure out our support and resistance levels first of all. So okay, where I found it topped at 1807. So just turn this. Okay, so interesting. So okay, let's give me a second. Okay. Okay, perfect. So, oh, that's very interesting. Why is that? Because, okay, that let me be precise actually. Can you see that for the time being, the gold is really trying to break the 61% Fibonacci level from the latest down leg that we have seen in June. So that's a very strong resistance area. And it's not just the 61.8 Fibonacci level, which is one of the most important Fibonacci levels. It's also this level, this area, what I have drawn with yellow, is also a support back in May and June, converted into resistance right now, into a key resistance area. So something to add on our watch list is whether the goal will manage eventually to overcome this barrier, because if it managed to decisive break and close this level, to start moving above this level, either today or within the week or the week after, it doesn't matter. So if it in general, if it managed to extend this rally, okay, and more importantly to move southwards from this level, then attention will turn to the peaks to May's high territory. So this high territory is back to 1860 and 1876. It's a long way until then, but just to analyze you the medium term outlook. Okay, so key obstacle will be the 200 exponential moving average and the 1826 territory. Okay, so that's the long term. So in general, we have seen that rally continues. The rally that we have seen since the mid of July continues. MACD turned positive, but signal line is still below zero, so we need a confirmation over here. RSI still points further to the upside. Sorry, stochastic still points further to the upside. RSI is about 50 and points upwards. And if I just, I want to add a trend line on the bottoms of my RSI, and it presents an increasing bullish bias. But as I said, this is a very important barrier, very important one. Okay, so will it manage to break it? It's struggling to break it for the time being. Will it be a reversal point? Not, who knows, but just to have on the back of your mind, okay, to keep an eye over here. So as I said, a move above it and a confirmed closure of the daily candle above it with a confirmation of a consecutive rally could turn the attention into the peak of, into the May-June highs. Now, on the flip side, if it struggled to break it and start turning back down, sorry, then a confirmation that the outlook for gold from positive is turning into negative will come once the asset, okay, breaks the 1758 territory. So once it moves below that territory, it's out. That will be a key support level that could change the so far outlook from positive into a negative one. Okay, so let's get back to the 1 hour chart and see what's going on over here. So my fast moving average have bullishly crossed. They keep pointing upwards. So everything, let me, actually, I'm going to go to the 30-minute chart. Yeah, okay, what we have over here. Oh, God. So, a big jump. This is what I have. Gapped up. So we have another 5 minutes to go until this candle closes, but you can see that there is a lot of fight over here because it's back to where it opened. What that means if the open price is very close to the close price, it means that there is a lot of fighting between bulls and bears. Okay, so in this case, will mean that sellers are trying to regain the control and to shift the gold lower. So wait a bit until the candle is closed, okay, to see how it closed in order to reassess the intraday picture for gold and see whether it will come back down, completing this gap and getting back to the 1780 territory. Okay, we need another 5 minutes to go. I cannot tell you what I am or whether I am or not, but that's up on the discretion of each one of you guys. Gold 1850 going super up. Is it? That's a long way until that happens, Mohammed. So we need confirmation, as I said. If it struggles to break that level over here, then 1850 will be just it will not happen. We need to see its decisive break of this area over here of this support that now has turned to a significant resistance area. I have done that. Okay. Someone asked about euro dollar. I think I have covered already, but I can get back to it again. As I said, they are double. So I'm gonna, okay, just a quick reminder, okay? Again, euro dollar is facing, this is a daily chart, it's in a key resistance area at 103.65 territory. It's a 60. Why is a key resistance area a very strong resistance area? Is because is the confluence of 61.8 Fibonacci level from the latest down leg we've seen in June and July, and also it used to be for 2 months in a row a key support level, so turn into resistance. A break above it could open the doors to 105 level again. On the flip side, though, if the asset fails to break that level, it gets back down, it could enter again the range, this 3 weeks range. Okay, 3 weeks range between the one territory, the parity, and 10285. So for the time being, the overall outlook remains negative to neutral. Okay, so we need to see at the top of the day a decisive move or even a break above that highlighted level. Intraday, okay, intraday. So keep an eye, as I said, on this resistance area. On the flip side, an intraday, the support holds at the top of this range. So at the 102.85, a move, a pullback that could bring euro dollar back into this 3 weeks, maybe 4 weeks range could alert the retest of 102, which is the mid of this range. Can you see that? So a pullback below 102.84 could get back into attention the mid of the range, so the round 102 level, and also the bottom of the range. So this is where we're standing. Let me know if you want me to cover it again. Oil, yeah, of course. So what we're having over here, so a bounce on the announcement. So it seems that the inflation energy number came well below than what was anticipated. Gasoline the same, new vehicles the same, so way lower than anticipated. Let me check the breakdown of the data. Okay, just a bit. Okay, brilliant. Okay, so a bit of a rebound for oil over here in this 1 hour chart, extending above the moving averages over here with okay, let me put the 30-minute chart over here with the next resistance back to yesterday's peak at 92 territory. So it's the very next resistance to be seen, 92. Okay, sorry. Okay. Do I have the breakdown somewhere? Okay, you see, oh, that's the 30-minute chart. Can you see that it closed, that candle just closed, and there is further boost to the upside? It's a big body candle, bullish candle without any tail lower. That implies that the bulls are in control for the time being. Okay, so let me just add the moving averages as well, 5 and 9. Okay. So bullish across, they keep pointing to the upside. So, okay, so that is still some steam to the upside according to the moving average and the stochastic that is keep pointing to the upside. So yeah, 92 is the next resistance area, while on the flip side, the day's low holds as a key support level for oil. So it's a bit overall. If I check the daily chart, For 5 days in a row, the oil is moving sideways. So the oil has stuck pretty much between 87, 88, and 92 territory for 5 days in a row. Some a doji candle yesterday. So far, is still in a is still on the very close to the open price. So that's adding to the consolidation. We need to see the asset decisively exiting this 5 days range in order to suggest that it will either keep extending lower since it's in a long downtrend since the mid of May, or it could appreciate a bit. But yeah, it's a long channel. Where is it? Here we are. It's been in a down channel since then. So a flip to the upside brings, and a break of 92 territory could be bringing to attention this confluence over here of the 200-day moving average and the upper trend line of this down channel, this 2 months down channel. Okay, so overall, under pressure, you can see MACD decisively and actually strongly negative. RSI close to this oversold territory. So an overall pressure, the overall pressure in oil continues. While intraday, we found some support. There is still some steam to the upside, but it looks a bit limited. Okay, so dollar yen. Dollar yen. Here we are, a big drift, reversing 3 days, a rally back to 133 lows. Okay, so I'm gonna just get rid of that. Perfect. So remember, this is an area that we have. I think it should be is something that Stuart posted on the last week on Friday's announcement. So this is a key resistance area. So it didn't manage this week to break it. You see, it was retesting since Friday, Monday, Tuesday, so far today, but it never managed to break that key resistance area at the 90th 135.50 level. So it has pulled back down, reverting all the gains that we have seen the last 3 days, and this is a massive decline, really significant decline that brings the week's bottom. So here it is, 132.50, and go just. I should correct this trend line. Here it is, connecting the bottoms of this trend. Yeah, here we are. Okay. That line over here is our immediate support level. So it's just is this week's bottom and is at 132.52. And a decline below that level could open the doors to 130.40 territory. What is this? It's a confluence of July's bottom along with this in this trend line, okay, that we have posted by connecting the bottoms, the turning points, if you prefer, for dollar yen since May. Okay, so you can see that the outlook remains negative for dollar yen in the medium term, because we have seen MACD turning lower, RSI the same, below 50, pointing to the downside. Bollingers have started extending northwards. Can you see them? Down, down. So there is a lot of pressure on dollar yen for the time being, with key support levels, the areas that they have drawn over here. One, two. Intraday, let's see what's going on. So the announcement, and as we have seen the dollar crumbles, we have seen the dollar yen breaking the 200 period moving average. So it closed outside Bollinger's over here and remains at the low territory right now, with MACD negative, stochastic pointing further to the downside. So there is still some selling pressure according to the momentum indicators over here. Can you see this? MACD extending down, RSI the same, stochastic the same. And let me change my uh, let me put on my fast moving averages as well. So this is the 5 one, and let's put the 9 as well. And what we're having is still pointing to the downside. However, the asset is outside the Bollinger, so we might either see a bit of a correction or some sideways move in order to get back into the Bollingers. But there is still, based on the momentum indicators and the fact that we have a really strong sorry, a really strong, big bearish candle with no tail up. That implies that there is a lot of the sellers are in control. A lot of selling pressure is still on. So, however, as I said, it's outside Bollinger's. A bit of a correction might be seen, or some sideways movement until it gets back into the range again. So yeah, keep an eye on the 132.50, while to the upside, resistance holds at yesterday's top, so that's far away and at the 134.54 territory. Aussie. Just before I move on to Aussie, I'll get back to gold to see how the candle closed, the 30 minutes candle closed. So let's see. Okay, so we filled that gap already. Okay, fill that gap. Fast movers are flatten. Momentum indicators flatten. So it's back into a range. Next support is the 1790 territory. Okay, so it seems that there is a bit of a, oh, where is it? Sorry, just give me a second to find it again. Regardless of the weakness of dollar, we're seeing a weakness on gold as well. So this has to do apparently with the yields. You know, the fact that the inflation missed expectation, it also signs, other than the fact that the Fed could deliver something less than 75 points in September. It's a very first sign that inflation might found its peak, and now is might seem turning softer and lower. So yeah, that's the very first sign that in regards to inflation peak. So I guess there is some kind of a, so the yields are lower, so dollar is lower, yields are lower, and that's why we've seen gold lower as well, because of the yields and not the weak dollar. So yeah, so dollar moves lower, yields move lower, gold move lower, and stocks are higher. Boom. Here we are. This is Dow Jones, by the way. But let's get back to Aussie. On the weakness of dollar, it also extend its gains, breaking the immediate resistance at 70.40. So broke that. Let me just let's see. 150, that's our big fresh, this deviation. Okay, just give me a second. This is what I wanted to draw. I want to connect the bottoms and the peaks. So above 50-day moving average, breaking the resistance that we have seen in July, right? Breaking this trend line that I have put by connecting the peaks of the last 2 months, okay, and extending higher. So 200-day moving average at the 0.7150 remains a key resistance area for the asset, okay. Let me just double check. While on the flip side, something very, very interesting will be a potential crossover of our 20-day above the 50-day. That will mean a more bullish bias in the near term. However, this has not been confirmed. We need to keep an eye on it, and that would imply to further appreciation of euro dollar. But yeah, that's just you need to have in mind. So on the flip side, the day's bottom, the 2 days bottom, and the 50-day moving average remains our key support level. Okay, so yeah, let's check what's going on. That's the intraday basis where we're standing, rebounded, reverting all the losses that we have seen yesterday, extending gains, breaking the trend line, opening the doors to the 200-day moving average, Bollinger's expanding higher, MACD increased, stochastic pointing upwards, RSI the same, but this looks to be a bit of a limited move. Can you see that the RSI? No, you can't. How can I do that? Can you see that? Yeah, now you can. Can you see that RSI has flattened? Okay, RSI has flattened, but MACD remains quite positive. So is this a limited move? This looks to be like a limited rally. So keep an eye. So for anyone that is interested on the intraday basis, keep an eye on the latest peak at 70.60 because this looked to be a limited rally that has already run out of steam. So only a closure at the top of the, actually in 15 minutes time, about that level could suggest further appreciation of Aussie higher, while a pullback could get back the Aussie back down to the 70, not 70 lows. Let me just choose and no, that one, sorry, my bad. 5 and 9. Let's see, they keep pointing upwards, but can you see the peaks over here? We have a lower high over here. Put some question marks regarding it's time for a pullback or not. Let's wait and see. Yeah, this is a 15-minute chart. You can see that it's struggling to extend gains. So this might be a limited bounce or it needs some correction. So 70.60 is our very, very next resistance area. Only a break and a closure of the candle above it could open the doors further to the upside and potentially to the 200 moving average. But for the time being, the round 0.71 level is the very next resistance area. Okay, once the asset breaks that recent high, that was Aussie, dear Billy, already covered. So Aussie yen, very, very volatile asset as well. Aussie yen. That's very interesting. It's a very, very long tail over here, where with the body be one third of all of this tail. So okay, so that Aussie yen holds into where's okay. Aussie yen has stuck into the 94, 90, 93.80 and 94.15 territory. So this long tail implies that bulls are in control and they have shifted the Aussie yen back higher again and they turning back to the range that we have seen since yesterday. So very, very neutral intraday outlook for Aussie yen DR Billy. Okay, let's see something. Let's check the daily charts as well. Oh, okay. So resistance and support holds at the top of the at the high of the day and the bottom of the day. So that implies to 93.80 and 94 94, let me be precise, 94.17 a level. These are still our immediate resistance support level intraday with a very neutral outlook, as I said, intraday. As you can see, that stochastic have clashed and they're flat, so that suggests consolidation. RSI is close to, so MACD is at zero, so again, consolidation. And RSI is at 41, a bit flat as well. So a lot of consolidation is seen in Aussie yen intraday in this 30 minutes chart. Now, we have seen some rebound since last week for Aussie yen, but a failure to sustain a move above 50 and above 20-day moving average. So there is some kind of a pullback since yesterday and so far today, uh, turning the outlook um, into a negative one once again. Yeah, so let me just where we're standing, pretty much a move below Monday's bottom could suggest the reversal of the asset back to the 1 to nearly 3 months bottom in the 91.30 territory. Oh, questions have we reached to the end. We reached to the end of our. There are no further questions apparently. So, guys, this is the time to stick any questions that you have below the comments, below the video on the comments box. So it was a very, very interesting um, session. Something that the markets were not, no one was really expecting that I will finally see inflation peaking, or whether this is just a once off, who knows, but it's definitely the first sign of peak inflation. That's why dollar is down sharply. Is because of what that means. It means that that I don't know, it might be the lower energy prices, it might be this aggressive tightness that Fed has done so far. But regardless of the reason, the inflation came lower than last month, lower than anticipated. So is this a peak? Who knows? But that could add to the concerns that Fed might announce in September a lower rate than the 75 points. So yeah, this is what it's all about. So if there are no further questions, I'm gonna call it a date. A bit of a so a bit of a summary again. Dollar under pressure, yields lower. That's why gold is turning down as well, has turned down as well. Oil saw a bit of a bounce earlier, along with stocks as well. So stocks have bounced on this announcement, okay, and they keep extending, as you can see over here in this this USA 30 chart. So very strong uh, hourly candle, and for the time being is keep extending higher. So there is the stocks are higher after inflation, while all the rest are under pressure. Uh, yeah, so that's pretty much it from me. There are no further questions. I'm gonna call it a date. We're gonna have another Facebook and YouTube live tomorrow with Stuart to discuss the aftermaths of inflation, but also to check together the PPI number, another very important number, very important economic data for the Fed that could actually clarify a bit, clear a bit what is expected for September, for the Fed meeting in September. So tomorrow we have producer price index, as I said, maybe one of the most important data releases for the Fed, along with jobless claims as well. So stay tuned. Tomorrow, another Facebook and YouTube live, same time, and yeah, join us with lots of questions, with assets that you want us to cover, with anything you need. We're here to help. We're here to explain, and we're here to help. So have a great day ahead. I'm gonna call it a day. I can say that there are no further questions. Enjoy, take care, and see you again tomorrow. Bye bye.